What is up, everyone, and welcome back to Explain the Charts. Today is November 30th, 2025, and we are taking an in-depth look at Ethereum, symbol ETHUSD. The market has been incredibly volatile lately, and we've got a lot to cover, from major news events to critical levels on the charts. First, let's talk about the news that has been driving the price action. Around November 20th, we saw reports of a massive $1.5 billion outflow from Ethereum ETFs, which triggered a significant crypto sell-off. This event saw ETH's price crash down to near the $2,800 mark, with some analysts at the time predicting a further slide to $2,750. However, following that crash, the market found key support, with reports noting a strong bounce from near the $2,640 zone. More recently, news from November 28th indicated that Ethereum was holding steady above the psychological $3,000 level. This resilience has been partly attributed to rising odds of a Fed rate cut, which tends to be bullish for risk assets like crypto. The overall market sentiment remains quite mixed, creating a fascinating picture for traders. On one hand, we've heard that some OG investors are selling, but at the same time, the largest Ether whales are reportedly continuing to accumulate. Furthermore, while Ether ETF buyer sentiment is said to be improving, bearish derivatives positioning is apparently lowering the odds for a quick rally to $4,000. On a longer term, more fundamental note, there's bullish news from the development side. Ethereum educator Anthony Sassano suggested the gas limit could increase significantly by 2026, and co-founder Vitalik, but Aaron himself expects continued growth next year, which points to strong underlying fundamentals. Alright, with that news context, let's dive into the charts, starting with the daily time frame to get the big picture. Looking back over the past several months, we can see the massive drop that started in early August, where the price fell from around $4,800 all the way down to a low near $1,400 in early April 2025. Since that bottom, we've seen a slow but steady recovery, building a new base of support. The price action really started heating up in early November, with a massive rally that broke through several resistance levels. We saw price surge from the $2 for 100s all the way past $3,500 in just a few days. This brings us to the recent volatility we discussed in the news. Let's zoom in on that period around November 20th. Here on the daily chart, focusing on mid-November, we can see the price action that directly correlates with the ETF news. On November 19th and 20th, we have these two large red candles, showing a sharp decline from over $3,100 down to a low of $2,788. This was a violent move downwards driven by those significant ETF outflows we talked about. But what's crucial is the response that followed. The price didn't continue to bleed. Instead, we saw buyers step in aggressively, leading to a strong bounce. This indicates that despite the institutional selling, there was strong demand at those lower prices. Going back to the full daily chart, after that sharp drop and recovery, we have been in a strong uptrend. The price has reclaimed the $3,000 level and has been pushing higher since. Just a few days ago, on November 27th, we saw a massive green candle, a more than 10% move in a single day, pushing the price to a recent high of nearly $3,700. This move demonstrates significant bullish momentum returning to the market. From this daily perspective, we can identify some key levels. We have a clear support level now established around the $3,000 to $3,100 area. Below that, the low of the recent crash around $2,800 acts as the next major support zone. To the upside, the recent high around $3,700 is the immediate resistance we need to watch. If we can break that, the next major target would be the psychological $4,000 level, which also aligns with highs from back in December 2024. Now let's switch to a lower time frame to analyze the most recent action. Switching over to the 1-hour chart, we can see the anatomy of that recent push to $3,700 and the subsequent price action. The rally on the 27th was powerful, followed by a pullback on the 28th. For the last day or so, The price has been consolidating, trading in a range mostly between $2,980 and $3,050. This type of consolidation after a strong upward move is healthy and can be seen as the market taking a breather before its next leg. It's building up energy for the next move, either a continuation up or a deeper correction. Short-term support on this time frame appears to be forming right around the $2,980 mark. A break below this could signal a deeper pullback. Short-term resistance is the top of this consolidation range, around $3,050, and then the recent high near $3,700. Now let's zoom in even further to the 15-minute chart for the very latest price action from November 29th. As you can see, the day was characterized by choppy, sideways movement, which reinforces the idea of consolidation we saw on the hourly chart. The price was trading within a relatively tight range, finding resistance just above $3,050 and support near $2,960. Towards the end of the day, we did see a slight dip, closing near the bottom of this intraday range around $2,990. This could suggest some short-term bearish pressure heading into the new session, but it remains within the broader consolidation pattern for now. So, let's recap the key takeaways and potential scenarios heading forward. First, the important price levels to watch. Critical support sits at the $3,000 level, holding this is key for the bulls. If that fails, the next major support is the November 20th low around $2,800, and below that, the strong support zone near $2,600. For resistance, the immediate hurdle is the recent high around $3,700. A break and hold above that level would be extremely bullish. Beyond that, the next significant target is the psychological and technical resistance at $4,000. Now for our unbiased predictions. The bullish scenario, which I would give about a 60% probability in the short term, is that this consolidation is a pause before continuation. In this case, we would see the price hold above $3,000 and eventually break through the $3,700 resistance. This would be reinforced by continued positive macro news, such as confirmation of Fed rate cuts or renewed inflows into ETHs. A decisive break above $3,700 opens the door for a quick move towards $4,000. The bearish scenario, with about a 40% probability, involves a failure to hold the $3,000 support level. If we break below it with conviction, a retest of the $2,800 lows becomes very likely. This scenario would be reinforced by negative macro news, hawkish Fed commentary, or another wave of significant ETF selling. A failure to hold $2,800 would be very bearish in the short term, potentially leading to a test of the $2,600 support zone. In the immediate future, watch for a breakout from the current consolidation range on the hourly chart. A break above $3,050 could signal a move to test higher resistance, while a break below $2,980 could signal the start of a deeper correction. That's our analysis for today. Thank you for joining us here at Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe, and turn on notifications so you don't miss our next video. Always remember, this is not financial advice. The crypto market is highly volatile, and you should always do your own research and make investment decisions based on your own risk tolerance. Trade safe, and we'll see you in the next one.